credit reports and credit reporting is vast. But in the context of getting pre-approved to buy a house, there are 3 basic questions that merit exploring. What is a credit report and a credit score? Who should you let pull your credit and when? And why does my credit matter so much? At its core, your credit report is a place that tracks what debts you have and what your track record is like for paying them back. Once a month, every bank that you owe money to or have an open credit card with sends an update to Experian, Equifax, and TransUnion with the status of your debt. Each bureau then produces a score indicating your risk potential. Higher the score, the less risky you are. But not all scores are created equal. They're based on algorithms developed to give weight to different things. So the score you get from a car dealership will be different from the score you get for a new credit card. The mortgage industry uses your FICO score. So FICO scores range from 350 to 850, and most people's scores are between 660 and 800. The next question is, who should I let pull my credit and when? You start gathering some names and numbers of good lenders. You talk to them. You start narrowing down who you could imagine working with. And then after you've completed the loan application with the lender you plan on using, let them pull your credit. It is true that if a lot of people pull your credit, it will go down. The good news is that within a 30-day window, several mortgage professionals can pull your credit, and it only counts as one credit pull against you. Perhaps you fill out a loan application with one, let them pull your credit, and then realize you would prefer to work with somebody else. Totally fine. Remember, 2, even 3 pulls all at the same time, not a big deal. If you have an inkling of a doubt about your credit report, best to have a mortgage professional pull the report at least 2 to 6 months before you want to start looking for a house. You see, if you need to work on your credit score or you need to correct something, that process does not happen overnight. Sometimes by clearing up a collection or paying down some debt, your credit score can jump up 100 points, and a whole different world of lending options might open up to you. Sure would be a bummer to get hit with higher rates and fees for something you could have cleared up ahead of time, right? Oftentimes I'm asked, could I just send you the report from myfreecreditreport.com and get pre-approved with that? Short answer, no. Your credit report is such a big piece of your pre-approval that it would be completely unethical to give someone a pre-approval letter without having pulled their credit. If someone offers you a pre-approval letter without pulling your credit, run. So here's why your credit report and score matter so much. The rate and fees for your loan are directly related to your score. Your credit score helps determine what programs you qualify for. The minimum payments listed on the report are the key elements of your debt-to-income ratio, determining your maximum allowable mortgage monthly payment. Your credit history tells if there's any collections, bankruptcies, short sales, foreclosures, anything like that in your past. Your credit report is a history of your financial behaviors and habits, and it is an essential part of getting pre-approved.